Good afternoon, everyone, and thank you so much for joining us for today's credit presentation. My name is Migdalia Gomez. I'm the AVP of Community Engagement at the Harvard University Employees Credit Union. So today's presentation, all of us have been on Zoom for the past couple of years at this point, but I'd still like to make sure for those of us that aren't as familiar, let you know how we'll be running today's presentation. So we are in webinar mode, meaning that you are all muted, you're off video, so you're welcome to enjoy your lunch, or if you have background noise, do not worry about it. We will not hear it. Of course, as we know, technology happens. So if at any point you're unable to hear me or there's anything going on, please use the Q&A. I will be using the Q&A today. We have disabled the chat only because with the Q&A, I won't lose any of the comments and I don't want to lose any of your comments. So just to make sure you know where the Q&A is and that it's working, please let me know where are you joining us from today. Again, using the Q&A feature, please let me know where are you joining us from today. That could be the office, Cambridge, maybe you're joining from home. I am, as you can see, joining from home today. The presentation will be recorded and it will be emailed. Wonderful. I see some folks, a lot of people joining from Cambridge, someone in the Cambridge office, someone in the office at the Kennedy School. Thank you so much for letting me know. And just like you let me know where you're joining, this is the same way. If you have any questions, please use that Q&A to submit any questions. You will get an email most likely by the end of the week with today's presentation. We also will post the presentation on our YouTube channel. So if you aren't already, I highly encourage you to follow us on our YouTube channel, which is www.youtube.com/myhvcu. I'm also putting that in the chat so that you all have it and can follow us. But even if you don't follow us, we will still email you that presentation so that you have it available. We do also have a very quick survey at the end. And with that survey, it's just so that we know what we can do to improve. We review all of all the survey results with the benefits office to make sure that we're providing content that will be beneficial to you and those in your families. So with that said, I'll get started a little bit about the credit union. I did say that that's where I work, but some of us may not know what a credit union is, and that's okay. I know I definitely was not as familiar with credit unions until I started working at one. But basically, a credit union and a bank are very similar when it comes to products and services. Both credit unions and banks have checking accounts, savings account, mortgages, home loans, RV loans even. But the biggest difference is that a credit union is a not-for-profit financial institution. Credit unions typically have to have a field of membership eligibility, meaning you need to have a connection to join. For us, we are Harvard employees. We are created for Harvard employees, so that is the connection. Anyone that's a Harvard employee is eligible to join the Harvard University Employees Credit Union. Now, once you're a member for life, even after you retire or are no longer employed at Harvard. And once you join, your family members are also eligible to join. That's all I will say about the credit union. But if you have any questions or want me to clarify anything, please let me know using the Q&A feature. One of the benefits of being a not-for-profit financial institution is that we are able to give back to our community in a lot of different ways. We partner with local charities to volunteer, we donate money, but then we also provide personal finance programming such as this. And for us, that's all under our Thrive Personal Finance Program. You can watch videos from our YouTube channel. You can watch other videos online, learning educational portal. We have a blog, free financial counseling, including credit counseling, which I'll talk about a little bit later. But if you need access to any of these resources, or even if you just want to learn more on a specific topic, know that you all have access to it through us, which is at our website, hvcu.org/thrive. And this is not password protected. It's available as a not-for-profit. We believe very strongly in the financial well-being of all of those in our community, including non-members. So you're always welcome to take a look at our website. Again, huecu.org/thrive. And I know we may have some folks I did see that some folks are joining from home. So not sure if you do work in the Longwood medical area, but I wanted to let folks know We will have a new branch in the Longwood Medical area that will be opening up in the fall. So hopefully next month or October, November, specific date to be determined, but soon we will be making that announcement. But for those of you that missed having us at the School of Public Health, we missed it too. Unfortunately, we were not able to continue to be there, but we did find another location because it's important for us to be accessible on both sides of campus. So now we're going to get into really how does credit work? That is why we're here. And I'll walk you through credit. You have me for the rest of the hour, maybe a little bit shorter, but know that if I don't cover something and you want to know more, just use the Q&A. Or if you want additional information, again, we have many resources on our Thrive website, which have credit courses, credit videos, credit blogs as well. But before we get started, I keep saying credit. But just to make sure we're all on the same page, I'm going to actually start off by giving you a little bit of an example of how credit could impact your ability to pay. Not so much your ability, I should say, but how credit can impact how much you pay when it comes to a product. Now, this example is a couple of years old, so the rates are a little bit lower, even though rates are not too far off from this right now. But essentially, why should we care about credit? The higher our credit score, the less that we will tend to pay for the lower we'll pay for a product in the form of a rate. So the higher our credit score, the lower the interest rate that we will pay. In this example, and this is an example of a 3-year car loan for $25,000. For $25,000. Now for this car loan, and again, this is just an example, but many lenders will do something very similar, which is called tiered pricing, which basically means if you have X credit score, then you're going to get X interest rate that will be charged to you. However, if you have Y credit score, you'll get a Y interest rate. So it's not the same across the board. Not all lenders do that, or they won't necessarily do that with each product. For us at the credit union, once you qualify for a car loan, for a mortgage, I'm trying to think of a personal loan, you qualify, so you get the same rate regardless of your credit score. But some lenders will not do it that way. They'll do it a little bit differently. So for this example, just showing that the higher the credit score, in this example, if someone has a 500 credit score, they may qualify for a car loan, but that rate may be 17, almost 18%. And I've seen this, especially with car loans. That means that their monthly payment would be about $900 versus if they had a higher credit score, in this example, let's say at 820, they would only pay 4.23 for that same product. Many times when people are shopping around, whether it's for a car loan, a mortgage, they may not spend as much time focusing on the interest rate. But this is really important to look for a lower interest rate or for a lender that will offer you the lowest interest rate that you qualify for based off your credit. Because in this example, that additional increase in cost just because their score is lower, for this individual, that's about $2,000 a year. Or over the life of the loan, in this case, a 3-year car loan, that's an additional $6,000. Not sure about you, but I know I could spend $6,000 on something other than having to pay it in additional interest. And, of course, the higher your score, it may not be that much of a difference. Like for someone that has a 650 credit score versus the 750, it's still, about $3,000. So the difference itself will vary based off of how high your credit score is. But what exactly is credit? I know I've mentioned it a couple of times, but I want to make sure we're all on the same page because we all have different histories when it comes to personal finance education. And also credit has changed significantly over the past couple of decades. So what could have impacted credit before may not necessarily impact it as much now. Now, what exactly is credit? Credit is ultimately utilizing a loan to pay for a product over a set time period. I like to think about it as to what is not credit. I often get the question, well, what if I use my debit card? Is that going to impact my credit score? It does not. If it's money that you have in your account and you're essentially withdrawing it, that will not impact your credit score. What impacts your credit score is when you are borrowing. So whether that is a credit card, so you're borrowing money for that month or longer if you're carrying a balance, or whether you're borrowing funds for a longer time period, such as a loan for a car, a mortgage, student loans, etc. That will have that impact on your credit report. But exactly who's collecting this information? Who's determining what these credit scores even are or what goes onto a credit report? Well, there are three major credit bureaus. You have Experian, Equifax, and TransUnion. There are other credit bureaus. However, these are the top three and the ones that most lenders utilize. The other ones, they're used, but not as high, not as likely, or not as popular, if you will. Just like there are other search engines. However, most people typically will use Google. Some people will use Bing. But for most people, when you tell them to look something up, what do people say? You Google it. So that's the top search engine. Just like our credit bureaus, they're top three: Experian, TransUnion, and Equifax. Now, these credit bureaus are collecting information on you, all of us as consumers, based off of our past credit loans that we've had, our credit card accounts, our student loans. They collect information on employer. They collect information on estimated income that we have, addresses, any public record information. That's also a part of your credit report. Now, this information is then utilized by lenders to determine if they're able to lend to you, and if so, at what rate. And that is determined in addition to utilizing the credit report and your credit score. Now, your credit report is going to have a variety of information. I like to think of it almost like a transcript or a transcript or a report card, if you will. It's going to have a summary of your progress over a certain time period. For credit reports, and I'll show on the next slide, a lot of the information will stay on, sometimes indefinitely, or 7 to 10 years typically. Now, the credit report is going to have all the outstanding debts that you may have. Again, car loans, student loans, the big ones. And, I shouldn't say the big ones, because if you have a small personal loan, that also will be there. It will also show your account history. So if you had a credit card with company A, but decided to close it last year, that will still appear on your credit report. May not have much of an impact on your credit score, which we'll get into shortly, but it will still appear on your credit report. It also will have information about collection accounts. And for those of you that may not be familiar with collection accounts, that's okay. I'll give you a quick overview. But let's say that I owed $10,000 to credit card A, and I never paid that. Credit card A tried, they emailed me, they called me, they mailed letters, but I never paid. Credit card A then either has an in-house collection office, or they may outsource it and essentially send my debt to a different agency or a different department within, and that they'll send it essentially to collections. What that means is that now instead of me, I still owe that debt, but I now will owe it to the collection company or the collection arm of that credit card. Now, this could have a significantly negative impact on my credit score. And it also means that other lenders will see that I am delinquent or past due on an outstanding debt. And this could have a negative impact on my ability to borrow loans in the future. And I'll get into all of that shortly. It also will have your request history. So if in the past you've applied for credit cards, mortgages, student loans, there is track of that is kept on your credit report. And payment history, any outstanding payments that you haven't made, or the frequency of payment that you're making. Are you paying your bills every month? Are they on time? All of that is captured on your credit report. It's a lot of information, right? A lot of information that's out there that could easily be accessed by a company if I apply for a loan. Companies can't just pull your credit report without having authorization. However, keep in mind, if you have a credit card with or have an established relationship with a company, you may already have signed something that allows them to pull your credit report. That will not impact your credit score. But most organizations, if they have no relationship with you, they will need you to authorize for them to pull your credit report. That is something that I always recommend folks take a look. Anytime you sign any sort of financial document, just see, are you authorizing a pull of your credit? Again, they have to disclose it, but just another reminder for us to be extra mindful when we are signing documents to know what are we signing. Now, for the credit report, when you think about it, there's a lot of information there. And if you're ever applying for a loan, I recommend pulling your credit report before the lender does. That way you're empowered, you know what's on your credit report, if there's anything that needs to be changed, or maybe there's something that you want to work on. Maybe your credit report has an error, you want to fix it. That will give you time. It also empowers you as a consumer to know what is on that credit report. You don't have to rely on that lender to pull it for you. With the credit report, as I said, there are three: Equifax, Experian, and TransUnion. So we have those three credit bureaus, and those three credit bureaus each have their own credit report. Earlier, I mentioned Google as one search engine and Bing as another. When I Google something on Bing, or when I Google something on Bing, when I Google something, or when I go to Bing and search there, there are two different looks. A lot of times the information will be similar. So if I were to Google Harvard, they probably both will have Harvard's website as one of the top websites to visit. However, they may have a different order. The images may look differently on the page. That's very similar to credit reports. Even though the information tends to be similar, they have different layouts. Often, another question that I get, should I pull my credit report from all bureaus? Yes, definitely pull from all three credit bureaus. Why? Well, because even though I applied for a car loan, let's say with Company A doesn't have to report to all bureaus. In fact, they don't have to report at all. They maybe just report to one. It is up to a business to report to a credit bureau. Most businesses and most lenders, however, will typically report to a credit bureau. But if I applied for a loan and maybe that was a small business, maybe due to cost or some other reason, they only reported it to TransUnion. If I pull my Equifax and Experian credit report, I'm not going to see that car loan. That's why it's great to just pull all three, make sure the information is accurate on all of them, and have a better understanding on, is there information on one credit report that isn't listed on the other? Annualcreditreport.com is where you can go to get your free credit report. Want to point out a couple things. It is a .com, but that even though it is a .com, that is the only website that the government mandates that the credit bureaus offer you your credit report for free. So annualcreditreport.com. I'm hoping that you're keeping a list of things to do after watching this webinar. And if so, I would add this to the list, pull your credit report. You can pull once a year for free from each of the credit bureaus through this website. All about preference. Some people will pull all three today, check it off the list, and you're done. Then they'll do it again in a year. Others will prefer to pull today, Equifax, 4 months later, Experian, 4 months later, TransUnion. Up to you how frequently you would want to pull them, if you want to do every 4 months, or if you want to pull all at once. You will not get your credit score for free through these websites. There is cost to do it. You can, however, most of your financial institutions, I know we do it at the credit union, most financial institutions will provide you with your credit score for free, and they will provide you typically with an overview of your credit report. It's still not the same as going directly to the source, seeing all of the information at annualcreditreport.com. I'm a visual person. I think it's easier sometimes to just see the information. So this is an example of a credit report that I pulled. So you can see here many moons ago, but the information in the layout still fairly accurate. Maybe some things changed slightly, but when a lender pulls your credit report, or when you pull your credit report, it'll look a little bit different. But I want to point out some things that are always going to be on that credit report. Your open date, when that account was open, the status, are you paying on time? Are you delinquent? Here you can see that your payment status is current. You can also see in delinquencies that there's 0. So you can see the history, and you can see the total balance. Now I want to point out that the current balance in this case is $4,200, $4,216. The credit limit is $5,500. In the past, that credit limit was almost reached. Here you can see the highest balance ever, and that was $5,429 that this person had on their account. When looking at your credit score and your credit report, you want to try to keep your current balance at 30% or less of your credit limit. So in this case, it would be 30% or less of that $5,500. The reason for that is that having a higher balance will negatively impact your credit score. This is another example of another piece of this individual's credit report. And this one is a Comcast bill. Many times people will be surprised to see utility bills, sometimes medical bills appearing on a credit report. But if it was sent to a collection agency, if there's a bill that's outstanding and it was sent to a collection agency, it will appear on your credit report. You can see it after Comcast, other collection agencies. This is, this person had a $310 Comcast bill. They were able to pay it. That was no longer delinquent. So you can see here an account type, payment status, it was seriously past due. You can see delinquency counter. It's had been past due more than 90 days for at least 4 months. And it was $310. Person didn't know. So once they found out, they took care of it, helped improve their credit score. Another reason to pull your credit report. You may not know if there's something that is a relatively small amount or manageable that if you knew, you would be able to pay. Especially if you're moving frequently. This happens where you moved, maybe if you had roommates, thought that last bill was paid and it wasn't. They're trying to contact you at an old email or old mailing address, maybe even an old phone number. Just pull your credit report. It's going to give you more information and it's going to empower you to have a better understanding of what your credit information is. I mentioned earlier that most information on credit reports typically is on your credit report for about 7 years. That's a good number. If you're not quite sure, probably it would be 7 years. However, there are some things that will stay on your credit report for longer. Chapter 7 bankruptcy, unpaid tax liens. If you have a closed account that was in good standing, 10 years. The reason it says in good standing, if it's in a collection agency, it may be on your credit report a little bit longer. As for your accounts that you currently have open, those are going to stay on your credit report as long as they're open. And then it will sort of transition once it's to a closed account for about 10 years. Credit inquiries will stay on your credit report for 2 years. However, just because it's on your credit report doesn't mean that it's directly impacting your credit score. If something's on my credit report, such as the Chapter 7 bankruptcy, that's on my credit report for 10 years, that doesn't mean that it's going to have the same impact as it would on year 1 of that bankruptcy. Year 1 of that bankruptcy, it will have higher impact on my credit report. If it's been 9 years since my bankruptcy, it'll have less of an impact on my credit score. Many times folks will find errors on their credit report. Unfortunately, it's more common than we think. I know I've had to resolve some. Fairly simple to do. You can contact the credit bureau directly and work with them. You can also contact the lender and see if they can fix it on their end. I always recommend contacting the credit bureaus. They specifically have to get back to you in writing within 30 days. They may not resolve it in 30 days, but they have to acknowledge your complaint and they have to work towards fixing it. Within that 30 days, you at least get an acknowledgement and you know that they're working on it. It's also good to contact the lender because sometimes people make mistakes or the systems might make a mistake or maybe something that the lender can just easily fix. Lenders can even fix things retroactively. So let's say that I made my payment in May, we're now in September, and they reported it as late. They can actually go in and fix it so that it appears that it was on time. And just as always, anytime you contact, whether it's the doctor's office, whether it's any office really, you always want to follow up if you don't or know when the timeline is. Ask, how long will this take to be resolved? And if it doesn't get resolved in that time period, just check in again. You always want to make sure you're checking in and keeping records of who you're calling, who you're emailing, etc. There are going to be times that your information may be compromised. And if that is the case, there are things that you can do. There are two different options if your information is compromised. And by compromise, it could be that your name and social security numbers were maybe hacked or compromised by, happens more and more nowadays. A lot of data, unfortunately, can be accessed by hackers, but specifically data that you may have with a credit card company, with a financial institution, Or maybe there was an email that was sent and the information that was sent was not sent securely. Never ever want to email social security numbers without it being through secure email, birth dates, names, passwords, maiden names, etc. That information can then be utilized to open accounts under your name. But let's say that your information was compromised, was either exposed through data from a company, or maybe there was an unsecure email that was sent. You do have things you can do, such as a fraud alert or freezing your credit. Now, a fraud alert, it adds an extra layer for banks or financial institutions to verify that it is you before they open a credit line under your name. For example, if you have a fraud alert, they may ask you for an additional identifying piece of ID, or may ask you for a pay stub. They may ask you for something that only you would have to, again, verify that it's you. Fraud alert or a credit freeze, which I'll talk about, pretty simple to do. You contact the credit bureaus and then they will put that on your account. The credit freeze is a little bit different. It's a little bit more severe, if you will, because with the credit freeze, they're going to make it so that no one can access your account unless they have the PIN number. I personally have done this, and what it does, I have a PIN number. My credit is frozen, meaning that if I were to apply for a credit card today, it would be, honestly, it would be declined unless I give the lender the PIN or go to the credit bureaus and unfreeze my credit report for a set time period, or you can unfreeze it indefinitely. That prevents anyone from accessing your credit. It does give you as a consumer a little bit more work to do because you have to unfreeze your credit. You can't instantly get approved necessarily unless you unfroze it or thought it beforehand. Just like the fraud alert can do that by contacting the credit bureaus directly. Now we have a better understanding of what goes onto our credit report, how to protect our information if there is fraud, how to prevent your information from being accessed. We'll talk a little bit about the credit score, but I do want to mention we are hosting, the credit union specifically, we are hosting a scams and fraud webinar. I believe it's October 12th. You're welcome to sign up. That is at hbcu.org/workshops. But I also know that we'll post it on Harvey and make it available to everyone. But we are hosting a preventing scams and fraud webinar with some of our folks that are in our operations department and credit card department that deal with fraud, unfortunately, on a daily basis because a lot of information is being compromised. So our staff is available and will be available during that webinar to give some best tips and practices to keep protecting your information. But now that we know what the credit report is, how to protect ourselves, talk a little bit about what exactly is this credit score. And we saw it at the beginning, the reason that we care about that credit score is that the higher our credit score, the higher or the more money we could potentially save, I should say, because our interest rates will be lower. Higher the credit score, the lower the interest rate that we'll have to pay on a given product. If that lender is doing what's called tiered pricing, or essentially if my product interest rate is based off my credit score. Now, with the credit score, the higher the better. That doesn't mean that if I have a 600 that is horrible, that's bad, I should feel bad about it. No, it just means that there are opportunities for you to bring up your credit score. Also, keep in mind that my credit score is most important to me when I need credit. Yes, having a high credit score is great. It's great to have it year round. But if I have a high credit score and I'm not accessing credit, doesn't really impact me now, does it? When do I really need it to be high? It's when I apply for a product. So if you find yourself having a credit score under anything, I would say under 670, you have time. You can work on improving your credit score so that when you do apply for a loan, you're in a position to have the credit score that you would want so that you can get the better rate. Now, with the credit score, even though we have 3 different credit bureaus, you have Experian, TransUnion, and Equifax. I know I'm continuously repeating those. Reason for it is I just want you to get familiar with those. So if you dream about Experian, TransUnion, and Equifax today, I'm sorry, but at least you know them. But in addition to having those credit bureaus, you have two other entities, which are FICO and Vantage Score. Now, these two entities are the ones that actually determine your credit score. And I keep saying your credit score, a credit score, but not 100% being honest, because there are multiple credit scores. You actually have probably like 30 credit scores. However, most people really care about a credit score, because if I have a FICO credit score of 750 with Experian, I probably would have something similar with the other bureaus. How does that work? Now, you have two models. You have FICO and you have Vantage. Each of those have a credit score for you. And each of those will have credit scores based off the credit bureaus. So I can have, or not I can, I actually have a FICO score for Vantage, a FICO score for Experian, a FICO score for TransUnion, a FICO score for Equifax. And then there's another layer. I have a FICO score 8, I have a FICO score 9. I have different models within that FICO score for each of the bureaus. Same thing now with Vantage Score. I have a Vantage Score with Equifax, a Vantage Score with Experian, and a Vantage Score with TransUnion. Now, why do I care? Why am I confusing everyone with all these different models? This is all to say, when you look at your credit score that you have, and do it now, go online. If you have, maybe some of you may use Credit Karma, or some of you may have your credit score through your financial institution, pull it up right now through your credit card and scroll all the way down to that fine print and see what score model and what company are they using for that credit score. The reason I'm telling you to take a look is if I have a 750 with FICO, if I have a 750 FICO TransUnion score, that doesn't mean that I'm going to have a 750 Vantage score with TransUnion. They're different models, different algorithms. They tend to be similar, but they will be different. So if you pull your own credit report and then your credit score and you apply for a loan, that doesn't mean that that lender is going to have that same exact credit score. Again, it's typically within the same range, but it's not exact. I tell you this because I've worked with members that sometimes are wondering, well, I applied, but they said my score was X, but I can see my score. My score is this. Yes, because there are multiple scores. Range is what matters here. So typically, if you have a 700 with one, you'll probably have something similar, a little bit higher, a little bit lower with the other, but just know different scores based off different models. Now, what exactly goes into those scores? There are different algorithms, and this is the information that FICO presents. I also will share a little bit about Vantage as well. It's not exactly like this, meaning that for some of us, if we have a credit inquiry, may not impact our credit score that 10%, maybe a little bit less, maybe a little bit more, but this is what FICO gives us as consumers so that we have a range of what exactly goes into your credit score. The big key here are the categories and how to work on those and working on those. I know this says FICO credit score. I know that it can be a little confusing, but I want you to think about lending money to a friend. So think of a friend, whoever that friend is. Yeah, let's use them as an example for the rest of this part. So if you're lending money to a friend, but you talk to another friend and that other friend says, you know what? Friend A doesn't pay their bills on time. You probably may not want to lend to them. You may be less likely to lend to them. And that makes sense. Why would I want to lend to someone that doesn't pay back? And again, we're talking about lending here. This payment history, that's 35% of that credit history. That credit score. So for those of us that are not paying our credit card bills, or even utility bills, to avoid being sent to collection agencies, but especially credit products such as a credit card, a student loan, a mortgage, Want to make sure you're paying those on time. Those late payments can negatively impact your credit score, and you'll see that impact usually within the next month. So if I miss a payment today or I make a payment that's late today, that will impact my October credit score. That payment history, 35% of our credit score. The other piece that's important is that amounts owed. I referenced this earlier when I showed that example of the credit score, the credit report, and the individual that had a credit limit of $5,500, but they owed about, I think it was about $4,300. That is more than 30% of that credit limit of $5,500. So to simplify it, if I have $1,000 credit limit on my credit card, I want to owe $300 or less. And I want to emphasize that or less. For credit, we don't need debt to have a good credit score. We need to utilize credit, meaning, yes, charge something every month, pay it off in full if you're able to, but you don't need to carry a balance to have a good credit score. Ideally, the less that you owe is going to be better for you because it's going to help save money. And also, it's going to be better for your credit score. Those right there, those two pieces are the most important. That payment history, paying on time, and owing less than 30% on your individual accounts and overall. So I get that question often. Is it just individual or is it overall? It's both. I like to say focus on the individual because that will help with the overall. It's a little bit easier to manage. So when you pull your credit report, take a look at what's my credit limit? How much do I owe? Is it under 30%? If it's not, start paying off a little bit more if you're able to every month until you get it to that 30% or less. And you'll probably see an increase in your credit score within a couple of months. When something negative happens on your credit score, so when you miss a payment, when you owe more than 30%, when you have multiple new credit inquiries, that is going to have a relatively quick impact on your credit score. When you do something that's great, when you're building that habit, it takes time to see the improvement. It's slowly going to get there, but it's not as instantaneous. And that makes sense if we think about it in the sense of let's go back to that friend that you're lending money to. You're lending money to friend A, and everybody that has lent them money to before, they've paid late for the past 2 to 3 years, and all of a sudden they pay one person back on time. It's really hard to forget that history of, well, they haven't paid on time for the last 2 years. That's great. You did it for 1 month. You want to see that a pattern of good on-time payments is being built, and that takes months. So typically it will take about 6 months, sometimes longer, sometimes shorter, for that credit score to increase, but stay at it. Just know that it does take time. The other pieces that impact your credit score are important, but they're not as important. That's why I really want to focus on the payment history and the amounts owed. The others are length of credit history. How long has that account been open? The longer that the account has been open, the higher your average length of credit history will be. However, that does not mean to keep an account open that doesn't serve you anymore. If that account has let's say a credit card that has an annual fee and you're not getting the benefit, may be worth closing it. It may impact your credit score or it may not. Really depends on your credit file. Meaning if I only have 2 credit cards, let's say that my credit report is only consisting of 2 credit items, my 2 credit cards, one that I opened 20 years ago, one that I opened a year ago. Well, if I get rid of the account that I opened 20 years ago, I'm losing all that history. Yes, it'll be on my credit report, but that benefit of that history won't impact my credit score. So in that case, it may not make sense to close that account. But if I have multiple credit cards, one that was 20 years ago, one that was 10, one that was 15, one that was 1 year ago, yes, I could potentially close that credit card that was from 20 years ago because I still have the other credit history. It really depends. I always recommend, if you want more specifics for your situation, contact Green Path Financial Wellness. I'll give you their information shortly, but it's also on our website, huecu.org/thrive. They are accredited credit counselors. This is free to you and anyone in your household. They can pull your credit report. It will not have a negative impact on your credit score, and they can give you tips on what you can do to improve your specific credit score. The other factors are important. It's about 10%. New credit means a new inquiry, sometimes known as a hard inquiry, when you're applying for a product. If you are just pulling up your credit report, you're looking at your credit score, having GreenPath pull your credit report, that is not for a product. So that's known as a soft inquiry. It's for educational purpose and will not impact your credit score. As for the credit mix, there are two different types of credit. There's installment loans and revolving accounts. Installment loans are probably the loans that you can think of. Mortgages, student loans, car loans. Typically, you pay the same amount each month in installments until it's paid off. With revolving accounts, those are things that we can't typically predict what the balance will be because it varies month to month. So my credit card bill today will probably be different than my credit card bill in December or January after the holidays. Every month it may change, so it's a revolving line of credit, which means that it'll have a different balance. Lenders typically want to see that you have both, but I don't recommend taking out additional loans if you don't need it or additional credit cards if you don't need it. Typically, when the credit mix makes more of an impact is, let's say you're applying for an auto loan. If you've had an auto loan before, you're more and paid it on time, you're more likely to be approved sooner than if you never had an auto loan, never had any other type of installment loan. A lender may have to do a little bit more research to see if you are eligible. Again, that does not mean that you need to go out and borrow additional funds to have a good credit score. Mentioned the Vantage score, very similar credit model. Here you can see payment history. They define it a little bit differently. They don't do percentages, but they say extremely influential. Age of the credit and type of credit is important. Percent of credit limit is important. So again, very similar to FICO in the concepts piece. These are a couple of examples of credit scores. When you pull your credit report, if you choose to get your credit score, or when you look at your credit score through any apps, through your financial institution or credit card company, you'll get a number and you also get different score factors. This is something that you're always going to have. There's always something to be said. It will never be empty. How accurate or how much attention to pay to it will depend on how high your credit score is. Here we can see that someone with a 488 FICO score, and this is a score 8, it just means that the type of credit score that they're pulling. Because this person has a 488, it's a lower credit score. Those score factors are going to be more important. It's going to help us understand, why is that score the way it is? Could the person do anything to possibly increase that score? Now, in this example, and I say example, but it was actual number that I pulled. I just obviously no personal information here shared. But this individual had serious delinquencies. We spoke about those earlier. That could be that Comcast bill that I showed earlier, an account that just wasn't paid. Also, the ratio of balance to limit on the account. This is what we spoke about. They maybe have a credit limit of $1,000, but instead of owing $300 or less, maybe they owe $900. So that ratio of balance to the credit limit is really high. And then the time since the most recent delinquency could be maybe too recent. It just happened. Someone with a higher credit score, the information will still be helpful. So this one, I can see too few accounts that are currently paid as agreed. So that's something I can work on. Derogatory public record or collection information, again, something that I can work on. Someone that has a 748, it does help to read the score factors, but it's not going to be as helpful in the sense that sometimes some of the things that are recommended, not necessarily things you need to do. So this one says time since most recent account opening is too short. Doesn't mean that you need to go out and open a new account. Lack of recent installment loan information. This is the one that I want to actually point out. This is the one. So doesn't mean that I need to go and get a new installment loan. No, just means, there are other things I can work on. There are some other options. There are some options to improve your credit score. I did mention GreenPath Financial Wellness. Even though it's listed as third, that really is what I recommend as the top one. If you are keeping that list of things to do, this is another one to add to the list. So the first thing I would add is pulling your credit report, annualcreditreport.com. The second one is contacting GreenPath. It's free, it's confidential. They are going to ask you for your name, for your social security number. They need that to pull your credit report. But that information is not shared with anyone. We pay for it, so it's free to you. I always like to tell people that because you question why is something free. It's free because we've already paid for it, so it's a benefit to you available or made available by us. There are products that may help with credit score. I truly recommend first contacting GreenPath. They'll let you know what they recommend. There are secured and unsecured credit cards. A secured credit card is a great option for someone that has no credit or is trying to build their credit because maybe they have a lower credit score. However, depending on your financial institution, they may be able to help in other ways. So that's another option is contact GreenPath and then contact your financial institution to see what options they recommend to help you with your specific credit score. I always like to talk a little bit about credit cards because credit reports, credit scores, typically, if you're interested in those, it could be because you're applying for a product. I choose a credit card to go over because it's very similar. It's a good basis for other products. Regardless of the product that you apply for, you have to be disclosed a lot of information. That information, though, isn't what people get excited about. We get excited about, well, what are the perks? What are the rewards with this card? What's the benefit of me borrowing this loan versus this other loan? And that's important, but the interest, the rates, the interest charges, the Schumer box, as it's known, this is the information that's going to help you compare products. This box, the Schumer box, which we actually were going to have or already have, I think, an article on it on our blog, is what the federal government requires lenders to provide you with when applying for credit cards. This information is readily available typically on a website. If it's not readily available on the website, I recommend taking a closer look, and it may be a flag that the lender may not be as open to sharing, but they have to share though. So if you don't see it, you can contact their support or just ask because they have to disclose this to you. For our page on our credit card page, it's at the bottom. I think it's fine print or I forget the specific term that we use, but it's there. But basically, if you're trying to compare multiple credit cards, look at these because they have to present it in the same information. You're going to then be able to see the annual percentage rate that you'll be charged for that product and APR for cash advances, balance transfers, how to avoid the paying interest, and then some general credit information. You'll also be able to see the fees. Again, I don't know if you've shopped around for any product recently, but websites are going to look different based off of which company your website you're on. If you're on Chase versus Art or versus Discovery, they're all going to look different. But this information has to look the same. So it's a great way for you to see what your penalty fees would be, what the transaction fees would be, if there's any annual fees. You also have an option to opt out if you don't want to get credit card information or credit card inquiries or product inquiries. You can go to optoutprescreen.com. You can opt out for either a couple of years or for longer. This is a good option if you don't want what's, people usually refer to as junk mail. If you don't want to get that, you can opt out. Keep in mind that you're opting out doesn't mean you won't get this information from your financial institution. They already have that relationship with you. It just means that if I don't have a relationship with company B cannot reach out to me because I've opted out. And it does work. That's something that I personally do. And I forget the years. I think I do mine every 7 years. And I can definitely tell when that 7 years has expired because then I start getting the junk mail as I sometimes think of it as well. So it's something you can do for yourself. Others in your households can also do it. And I keep mentioning GreenPath, and here is the information that I wanted to share with you. They are available at hbcu.org/GreenPath. I would add that to the list of websites to follow up on later. You can also actually ask them to call you directly, or you can call them directly. I recommend typically just giving them a call directly. And I put it in the chat. Apologies, I'm trying to type and speak at the same time. So if it's not a URL that you can click on, just copy it over to your browser. But it's hbcu.org/greenpath, free financial counseling for you and anyone in your household as well. And I did mention our blog. We post about 3 blog articles a week. We have an entire section dedicated to credit, whether that's secured credit cards, what exactly is on a credit report. If you want any more detailed information on anything that I spoke about, you can go to blog.hbcu.org. I know I provided a lot of information, but I do want to remind folks this is all educational. It would be a disservice to tell everyone that their credit is the same. Everyone's credit information is different based off your credit history. That's why we recommend contacting GreenPath for individual information on your situation. And I also want to say that we are here to help. So if there's something that you think about in the future, or if you want any additional resources, know that you can contact us. We are also on all social media platforms using @myhbcu. If there are any questions, I will gladly take them at this moment. I don't see any right now, but if there are any questions, I will stay on for about another minute. And if you don't have any other questions, please have a wonderful afternoon, and you will get a recording with the presentation by the end of the week or early next week at the latest. I don't see any questions at the moment, so I hope everyone has a wonderful afternoon, and thank you so much for joining us. I know that there are additional web workshops that are being presented in partnership with the Benefits Office, and you can access those on our website, and we'll also include the link on our follow-up email. Thank you, everyone.